My conspiracy theory has been that this summer, at some point in time, we might see S&P 500 drop 10 to 20% in a quick amount of time. And it would be in such a quick amount of time that it would cause a lot of fear in the market, panic in the Fed. Wall Street would force the Fed to essentially start cutting rates. And that's been my conspiracy theory. Whether it happens or not, we'll see. But that's just like putting the pieces together, know how Wall Street loves to kind of play with the market, and really, I've felt like the Fed's decisions and everybody's decisions is really based upon what Wall Street wants, what Wall Street gets. And Wall Street doesn't mind that the Fed's been raising rates because we got to kill down inflation or it's going to cause a decade of problems. And so, but once we start getting to that place, if the Fed's not moving and they're not getting ready to cut, Wall Street will force them to cut. And they will force them to cut by dropping the S&P 500 10 to 20% in a quick amount of time. And that will cause fear, panic. You add some bad employment numbers on top of that or something, other bad economic numbers, and boom, the Fed's ready to start cutting rates. They'll have every reason to do so at that point in time. Market would be tanking, right? Oh my gosh. And then all of a sudden you'd see a recovery once they start cutting those rates there, okay? And all of a sudden the market would kind of balance out. So anyways, that's kind of a little conspiracy theory I have. We'll see what plays out there. Might not, but that's just always been something I've just been thinking about. Massive fear and scared folks, especially in the banking system. When that happens, gold goes through a boom cycle. Look back at the great financial crisis and look what gold did from about 2008 through about 2011 or so, right? Once the fear starts dissipating, right, and the banking system was then in the clear again, and you stopped really seeing a lot of bank failures in 2012 and moving in future years, you look what happened to gold after that, right? And look what happened to the stock market after that. And so just understand, in order to get gold to continue to spike higher and a lot higher, you really need people to continue to be fearful, scared. But one of the other limiting factors, in my opinion, on gold, and this is more over a longer term perspective, is a lot of folks that are in the younger generation do not look at gold as gold. If they're going to look at something as gold, it is Bitcoin. And I know there's a lot of maybe older folks that might be watching this video right now that you're like, that's ridiculous. Like, why these millennials, why they buy Bitcoin instead of gold? It's the way it is, okay? It's seen as digital gold. And so for a lot of people, especially in my generation, I'm 33 years old, right? A lot of people in my generation would much rather put their money, they feel like it's a safer place, it's going to give them a better ROI over the next 10, 20 years in Bitcoin than gold, okay? Take that for what it is, but it is what it is, okay? And so just do keep that in mind in regards to gold and excitement and if it's going to go higher or lower and things like that. Commodities, you don't usually see them go down this much this early, but also keep in mind, we just came off the most insane bullish commodity cycle we maybe have ever seen, or certainly one of the most insane bullish cycles we ever saw. I mean, from basically through 2021 through the first half of 2022, certainly in my lifetime, we've never seen that insane of a bullish cycle in commodities, where almost every single commodity went to the moon, okay? It actually started in 2020 for a lot of commodities, specifically around summer of 2020. And so that's just one of those factors to look at, and you got to think, what did we come off of? The most insane, arguably the most insane bullish cycle we've ever seen in the history of commodities? Well, it makes that drop seem that much more significant. Like, it's like, basically what happened with commodities in terms of from the summer of 2020 through summer of 2022, right? That cycle was as insane, in my opinion, when it came to commodities as the tech bubble was to stock valuations. Let that sink in. It's interesting because I think everybody in the market, if you see the latest AIA investor sentiment numbers, right, we're neutral as far as the neutral ratings actually overwhelming right now versus bullish and bearish. And it kind of, even if you look at like the public count, it kind of feels like it's in a neutral position, right? I mean, it kind of hasn't done anything in the last few months here. We're just kind of stuck in the 1.4 to 1.5 range. Let's call it somewhere in there, right? Entering this year, the public count was around 1 million. And then we just had this crazy up move. And now we're just kind of in stagnant mode because the market's really looking for direction. Are we ready to go bullish? Or is that just a little short-term thing? Are we ready to go bearish? Are we going to have some major recession? Is it not going to really happen? Is it, where we're going to get that soft landing or a mid landing, or are we getting, let's call it a hard crash landing? And so that's what the market's really trying to figure out. And I think that we're going to get some clarity in this earnings season. If we hear executives of companies be a little more confident, That's going to go a long way, because I can tell you last time they were not very confident at all in the last earnings season. A lot of cloudiness, not a murkiness, a lot of we don't know where things are going. If we can just become a little more clear, and people don't got to be like experts on knowing exactly where the economy is going and their business is going, but we just need a little more clarity. If we can get a little more clarity this earnings season than last earnings season, I wouldn't be surprised if the market kind of trends up over this next few months. If we don't, and people are still just as scared, then ultimately we'll kind of just remain in this like neutral phase of like, well, we don't really know if we're going to move up or down or anything like that. Okay, and so that's just kind of what's going on there. Now, I suggest to everybody out there, whatever you use to track stocks on whatever service, okay, add a possible buys list. It's just an easy way to keep track of what your buys are every quarter. So I update mine every single quarter. And so right now we're in the second quarter of the year, obviously. So I have my second quarter 2023 possible buys. I have 19 different stocks on there, right? Am I going to buy 19 stocks during the quarter? More than likely, no. I might only buy, 3 or 5 of those 19 stocks. And there might even be a stock that comes up here or there that I add to that list or delete from that list over time. But it's just an easy way of keeping track of an actual list of stocks you're thinking about buying in the next quarter. Very, very easy. TSMC, semiconductor giant. Here's the deal with TSMC, okay? This stock is going to tell you everything you could ever want to know, okay? And the reason being is TSMC, they manufacture almost all the semiconductors you could possibly imagine. And so that's one of those companies that they're basically going to tell you how the tech industry is doing, how smartphone sales are doing, how computer chip sales are doing, right? Because they're the backbone of everything. Literally, they're the backbone of computers. They're the backbone of smartphones. They're the backbone of everything, okay? TSMC is. And so I think that's just one of the most important companies to really tell you how tech in general is doing, hardware, okay? And so definitely I think it's always one to keep an eye on. I think the valuation is intriguing in TSMC, for anybody that's a long-term investor out there as well, okay? American Express, definitely one to keep an eye on. Charge-offs as well, especially in regards to that, right? Union Pacific. So Union Pacific, I've actually considered maybe buying that over the next few months, but the problem is I think they're going to have a lot of regulation coming. And also if there's a slowdown in housing and just the overall economy, that's going to continue to kind of weigh on Union Pacific, but that's more of a short-term thing. I'm more scared about the regulation part because that's a long-term cost. The economy goes up, the economy goes down. It is what it is, okay? Like you're going to have some economies that are great, you're going to have some, time periods when the economy is bad. But at the end of the day, regulation, that can hurt a company like a Union Pacific for a decade, 2 decades, right? If they have an additional huge cost. The Blackstone Group, this is one that is a lot of kind of like secret stuff being talked about of potential problems at Blackstone Group. So we'll see, okay? I think that's one just to keep an eye on.